Hello, everybody. It is November 10th. Crazy to say, year's almost over. Wanted to come back with another weekly market update, let you guys know what I'm taking a look at here in markets. The biggest thing why I wanted to wait a week or two since the last one was we just had a really robust earnings season. Pretty much all the companies have reported for Q3. And I wanted to digest all that before hopping back in. And the most shocking thing, maybe not shocking, but the thing that stood out the most was AI infrastructure and really what's become the newest pillar of economic growth. I know AI makes daily headlines, and investors are questioning the businesses AI-related investment can continue at this pace. Because we're truly seeing some remarkable money here. The money being spent on data centers, software, and other AI-related investments reveal the structural shifts occurring in our economy. Because when you really look at it, it's just been this AI growth that's been boosting GDP. You see companies, Chipotle was a great one. Consumer discretionary, consumer staples got hammered. It really is AI that's driving everything right now. So I really wanted to touch on that, and it really, again, I can't stress enough. At least for now, it's signaling a structural shift in growth. AI-related business investments is rapidly becoming a cornerstone of the U.S. economy right now. Uh, and the shift is how the expansion is financed and sustained. In the first half of 2025, investment in information processing equipment and software, largely driven by the infrastructure around AI, is a small yet mighty slice of the economy, yet contributed a majority to the economic growth during that period. This surge is being led by hyperscalers like Microsoft, Amazon, Meta, Google, which are collectively projected to spend hundreds of billions of dollars on AI-related capital expenditures just this year alone. The boom includes massive data center construction, hardware purchases, and early stage investment in supporting infrastructure like power grids. While the full economic impact is still unfolding, AI investment has already outpaced traditional growth drivers like consumer spending, suggesting a fundamental restructuring of our economy's growth model at this point. We will address more of this phenomenon, in when we think about shooting into next year. I'm definitely going to touch on that then. But nevertheless, AI-related capital spending is expected to play an even larger role, and not just in tech, but across sectors adapting to automation, data-driven decision-making, and productivity enhancement. The reordering of international trade this year intensifies the pressure on domestic firms to improve productivity and lower input costs, and AI is going to play a huge part of this. So when I think about the risk, it's really if this ends, if you look at every other sector of the economy, we're flat to slowing down. It really is just the AI spending at this point. So while I'm optimistic that this can play a huge part of the future, recognizing that eventually this train of spending is going to come to an end, and that could lead to some issues. Now, when is it going to be in the next quarter? Is it going to be in the next couple of years? I don't know, but definitely something I'm keeping an eye on here. So the bottom line is really if you're a Mag 7 company investing in AI, you're driving the economy forward right now. If you're everyone else, you're really kind of lagging behind. So I hope that helped. If you have any questions about this or how to position your portfolio for this, please give us a call and we'll talk more from there.